Welcome to the Broken Pie Chart Podcast, episode 331. Yep, 331. That's right. I'm your host, Derek Moore. With me, back again, a recurring guest from Halbert Wealth, Spencer Wright. Spencer, what's going on today?
Hey, Derek, I'm very glad to be back on the show today. Looking forward to it. Things going great here in Austin, Texas. It's not super hot. The weather's decent, and we've had quite a bit of rain so far this summer. So all those are great things.
All right. Well, no drought in Austin this year. No drought in the markets, though. I got to I keep talking about this, Spencer, on different shows I've done. Like, it's the most hated rally ever.
Oh,
We made a new all time high today. We were
yeah,
at 4,800 and something
I
at the
know.
lowest in April. Right back up.
When it was bottoming, I think you and I had talked, and I said, "You watch. Uh, this thing is going to start grinding higher after that Trump tariff announcement of, oh,
Hmm.
well, maybe not, and we're gonna figure it out. I said this thing's gonna start grinding higher. I didn't figure we'd be at all-time highs again this soon, but that's why this is the most hated rally ever.
I mean, it's institutions have been on the sidelines. I shouldn't say
Yeah,
institutions, but I think there have been a lot of people that said the tariffs are going to create uncertainty,
yeah.
valuations have to come down, earnings estimates have to come down. I looked today, and just to kind of give you an idea, we're at about 22.7 times forward estimates. 270.43 according to Bloomberg is the forward 12 month. That had slipped
Right.
into the 260s. It's back up, and no surprise, when markets are going higher, targets go higher, expectations. But I mean, this feels a little bit like March of 2020.
Right.
And I mean, it's
Well, I mean, valuations though, Derek did come. Oh, by the way, before I get into that, that was a hated rally. The
yes.
2020 rally was which was far bigger than this one so far. And
Hmm.
that ran the whole year, from March to the end of the year, and it was absolutely despised. But
What
and
what
I
are we
think
now,
this is
Spencer? 2.5
shaping up
months?
the same way. Yeah, we're
Is
two
this
and a
two
half
and
months into this.
all right, so when was the high in March 2020? Was it end of February, very beginning of March? So 2.5 months would have been March, April,
Yeah.
kind of Mayish. I
Hmm.
don't know. Were we up kind of the same amount in May back in
Rough,
2020?
I mean, roughly.
Yeah.
Um, if you look back at it, that's about right. I mean, the drawdown was worse, right? The
Yes.
drawdown back then was about 30%. And the worst drawdown here was around 21%. And so the drawdown was worse. But you said that the argument of, well, valuations, some of these stocks have to come in. Valuations are really stretched. Some of these numbers, they're just not, they're out over their skis, right? Some of these values have to come in. But if you look at just, the Mag 7 names, right? The things that get all the attention as opposed to, the S&P 493, let's call it.
Yeah.
But you look at the Mag 7, Apple's PE, for example, is 31. Okay. Microsoft's is 38. Now these are high numbers, but for these types of stocks, not necessarily that high. Nvidia, maybe the king of the Mag 7 in some ways, their PE is 50. That's a little high. But go to someone like Google, right? 19. 19
And
on.
you're talking trailing, because I know Google or Nvidia's
Yeah, yeah, yeah.
forward is in the 20s, but yeah, trailing.
Right.
Yeah, sure.
Trailing PEs. And my point is that the valuations have come down
Can I
on
tell you
on
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 Google
on the
though?
stocks.
And my son is going into high school. I asked him to Google something the other day, and he goes to ChatGPT.
Uh,
I mean,
don't tell Sundar Pichai that.
I'm just saying, like, it's. I mean, look. I mean, I'm not a certainly. I don't analyze Google for a living, certainly, but if high school kids are going to ChatGPT to quote unquote Google something,
Yeah,
like
I
is
know, and that's what's And it's not actually even that good for that use, right?
No, it's not the right use
No, it's
of
not the right use
ChatGPT.
of it. There are other things that may be in that AI space that are more googly, right, friendly. That might be,
Hmm.
Perplexity comes to mind as a natural AI Google replacement. Though its market share, again, if you look at it, it's Chat GPT at the very top of that whole structure, followed by Gemini, a Google product, but it's a big step down to number two from Chat GPT. So they are in charge right now.
All right, I kind of got you derailed, but we were talking about valuations. People,
Yes,
I mean, just think about this too. The whole economy in March of 2020 was shut down, and the
yeah,
market bottomed at like 35%. We were basically intraday over 20%. The economy didn't shut down, it was just tariffs.
right, correct.
Um, no, I mean
Panic stuff.
it's a hated rally. Like everyone's like, there's no way it should be back where it is. But
Well, you and I were talking about it. There was no real systemic risk, right? There wasn't a banking crisis or a real estate crisis or anything like that. It was, and I hate to use this term, but it was basically vibes. People were just scared and dumping positions based on what was a shock, admittedly, on tariffs out of the administration. And you can tell given how volatility responded.
yeah, yeah, no, I mean, I think that's right. I mean, Vol definitely did not price in the rollout. I think if
No,
they had messaged this and if they messaged it better, anyway, I mean, it doesn't even matter anymore. It's like,
yeah,
I think you and I both agree on tariffs, though, that slowly they'll stop being in the news as much and
yeah.
they'll come up with something that everybody can claim a victory and they'll move on. I mean, don't you think
Yeah,
that's the most likely outcome?
right. Everyone's kind of waiting maybe on, that July 9th deadline is hanging out there. And I think that they're going to find there are off ramps already being made. And honestly, they've locked down China, and I think the EU is signaling that they're maybe more in the frame. You add India, South Korea, and Japan to that mix, and you probably can safely do that by July 9th. I mean, this doesn't sound great to say, but the other countries really don't matter that much.
Well, we have international listeners, Spencer. So, I mean, they do matter to us. But I mean,
I mean, but I'm talking about as far as you add up all those countries and the trade and the levels of GDP and everything, and everyone else is just they'll get it sorted out. But it's nothing that if those things don't get done or rates go back up or whatever, it's not going to have the same impact. My point is, it's not going to be a catalyst for markets to sell off again, in my opinion.
yeah, I mean, it feels like it's moved on to something else. The geopolitical stuff, it's like the future sold off. And you know this, Spencer. I mean, I've tried to explain to people if you're looking at futures prices on like the open on a Sunday, there's not that much volume. So any sort of like
No,
selling pressure. And by the way, I mean, sometimes people have big books and they're you can short a future and you're basically short so many deltas against your book and things like that. So it's a
right,
way to sort of, do something like that. But no, I mean, we've sort of moved on from all this. I mean, here's the thing. It's a hated rally, but there are times when it's climbing the wall of worry. There's always a reason to sell. There always is. I
sure,
mean, just go back in history. Like you and I were around in the late 90s.
hmm,
And in the late 90s it was like, "Oh, what if the Asian contagion, what if that spills over to the US?" Like international markets went down, US markets actually did not. It was
correct,
volatile, but it wasn't, right?
right. Yeah, and the I you've said in the past, and I think this is very true. Um, these things only matter when they do.
They matter when they matter.
Yeah, and right now, I think tariffs, frankly, is yesterday's boogeyman.
Well, I'm also going to say, and I said this last week on the show, I don't think the Fed matters. I think people think it matters, but
Yeah,
if they keep rates where they are, does it really matter? Maybe to housing, but
Yeah, I mean, they there's a thought out there. I'm not going to go off on a housing tangent, but there's a thought that there's some sort of housing crisis brewing. But I think it's more a crisis of affordability for people in the mid tier where interest rates are right now. Because even if you had a bunch of people that were wanting to, it's part of housing, part of how all that works is that people are in houses and they upgrade. Uh, and the people who would normally be upgrading aren't upgrading right now. And there's more houses on the market, longer time to sell because they're golden handcuffed into these 3% mortgages, and they're not going to upgrade. Even if you have great credit, you're going to come real close to doubling your mortgage rate. So that part of the market just isn't happening. And so I think the
yeah.
market is just kind of is just at a stalemate, the housing market. And the Fed can lower rates, and they will, but they've done everything more or less that they've said so far. And way back when, if you want to go back to 2022 when all this started, they intimated that they were going to do this and it was going to take as long as it took. And at the end of it, they were going to return rates to somewhere around 3.5%, 3.25% for a long-term
Hmm.
run rate. And I suspect that's what they're going to do.
I mean, that's what the 2 year says they'll do. If the
Yeah,
2 year is any proxy, the 2 year says rate should probably be at right around three.
yeah. Which is, by the way, as you know, still accommodative. If you look at the 50-year mean, is around 4%.
Yeah, I mean, if I look, let me make sure. 3.73. My
Okay.
mistake there. Yeah, 3.73. So that's probably. I mean, from 4.33 effective rate, that's roughly 50 basis points ish.
Yeah.
Um,
Which means
by the way.
mortgages will be 5.75% if you have good credit, good for good qualified
Well,
borrowers.
the spread. The 10 year. As you know, it's driven off the 10 year, but the
Right.
spread is much higher. Normally, the spread between a 30 year mortgage and the 10 year yield is about 170 bips or 170 basis points.
Sure.
Um, All right, let me go to this. So a couple weeks ago, I talked about there's dispersion in the market
Hmm.
and how it's not everything is going up or down at the same time. So here's just an
Right.
interesting thing, and it leads into you and I both independently had somebody passed it to me, but I think you found it on your own. Chamath Palihapitiya on his All In podcast was basically excoriating, and I'll say that it's probably an overuse. It's probably a little too strong of a word, but basically saying like Apple is in danger of, in his words, not ours, but it's in danger of like not really growing and just getting into a steady state. But year to date, Spencer is. I'll throw for the audience out some numbers. The total return on Apple year to date is minus 17.2%. Meta is
Mm,
up 22%.
yeah.
Avgo Broadcom up almost 17, Nvidia up 13 and a half, Google down 8.6. Is that because my son is going to chat GPT to Google something? Um, S&P up now 5.71% total return. So Apple, yeah, I mean, I think in Chamath, what he was saying is basically like, and I agree with him that Siri is awful on my iPhone. Like
It
Siri
is
can't,
absolutely terrible.
yeah. I mean, so Bloomberg had an article too, and I think they mentioned it. They were like, "Well, what would they do?" And I don't follow this that closely, but we were supposed to have AI, a Chat GPT integration with Siri. A Bloomberg article. Let me see when this was dated, June 20th, and it was Apple executives have held internal talks about buying AI startup Perplexity.
Yeah.
And they mentioned it on the show. I mean, who knows where this stuff happened? I don't even know what they would value it at, but
I
like
saw somewhere around 15 billion.
I think they referenced a number sort of like that in the Bloomberg article. I'll link to it in
Yeah.
the show notes, but
Look,
um,
look, man, they have to do something because the market picks winners and losers, right? And among the Max 7 has been very homogenous, and they sort of been. people would think they trade in lockstep, and when they all go up, they all go up, and they all go down, they all go down. Not happening. They're starting to separate. They're differentiating, and Apple is suffering in that differentiation. And a large part of that suffering is that they are perceived to have no AI infrastructure or any executable AI plan. Out of their recent developer conference, they announced basically a cosmetic facelift for all the iOS products and a rejiggering of all the OS nomenclature so that they're all the same. Oh well.
Hmm.
You do things like that when you don't have anything big to announce. And they announced this Apple Intelligence thing. It seemed to be stillborn, and then it went away, and that's not a good sign. And people notice that. So if they're behind, and everyone suspects they are internally, their only choice is to use some of that massive cash pile, and Apple has a ton of it, right? Use some of that massive cash pile to buy someone. Well, you can't buy Chat GPT. That's not going to happen. I mean, they have enough money theoretically to do it, but they're not for sale. But Perplexity, I think, makes a lot of sense if they can make that deal happen. And I think they have to make that deal happen almost at any price, in my opinion. If you look at Apple stock right now, year to date, it's down 9%
Oh, I
on
had
the
it
year.
down 14 or something. Maybe my numbers are wrong, but
Let me see, year to
seven
date.
minus
No, no,
17.40 total return.
yeah, yeah, you're right. Uh, I nudged the mouse and made it do something.
There you go.
Yeah, but yeah, you're right. No, it's underperforming wildly. Um, and you know, revenue is still good, but what I think what Chamath was saying, and I saw part of that, was that this company is in danger of going to sleep, right? Of just they have great revenue streams. They'll keep making a lot of money. People will keep using iPhones, and you'll buy the Apple iPhone 18, 19, 36, whatever. But they're not innovating. At some point, if you want this thing to grow, you have to have innovative products. And when you have former Apple luminary Johnny Ive now in the pocket of Sam Altman and ChatGPT for $6.5 billion to produce some great new AI thing for them that maybe Apple could have had, who knows? It all seems like that they're fumbling the AI thing,
I
and that's
mean,
bad.
you and I are sort of interested in AI. I wonder though, the other side of this is their installed user base, like how many people have iPhones or Apple products, is pretty big. Once you're in the Apple ecosystem, it's just easier to, you want headphones, you do the Apple ones because they just work.
Yeah,
Like I mean, their stuff just works really well.
sure.
So, Chamath was saying that, I think he even said this in his podcast. Like, if you just want to focus on building the ecosystem and getting recurring revenue in their app store, which is under pressure anyway, or
Hmm.
um, it's not like it was. You and I remember the '90s where when you bought a computer and 6 months later you could buy a computer 3-4 times more powerful. Like, I have the brand new
Yeah,
iPhone. I get a new one every year. Is it any different than the prior one? No, it's
yeah.
really not. It's not. But it doesn't mean that, I mean, I just don't know. I mean, I'm not telling people to buy it, to sell it. If people want to buy it, they buy it. If they want to sell it, it's an interesting discussion, and it's an academic discussion about that business. Now, I will say that Apple in the past hasn't been first on a lot of stuff. So maybe they just don't think there's,
Yeah, that's a great point, Derek. They
you
have
know,
not been, but and that's by design a lot of times, to be honest.
yeah.
And they're willing to, oh, look, we've added these great features. Oh well, we've had, that's been on Android for 5 years. Welcome, guys, finally doing some things.
But sometimes they
Um,
do it right. Like, they see how other people
right.
make mistakes. Everybody remembers the Zune player.
Oh,
No, actually, they don't. It's,
yeah,
you and I remember that. That was a
I
Microsoft
do.
like
Yeah,
iPod comparison.
yeah,
So, I mean, it is the Mac 7 is only up 1.5% this year. The market's up 5.7. Apple now
yeah.
is the third highest weighted stock as of yesterday. I'm looking at the State Street SPY holdings.
Is it still the
And
most widely held stock in the world?
no, it's not. It's not. It's third.
Okay.
It's third.
It's
It's
third. Okay.
5.78. Nvidia 7.28. Microsoft
Okay.
7.12. Both recently made all-time highs. At
Yeah.
Amazon's 3.95. So it's still above Amazon as far as market weight. But I mean, this goes back to the whole. This is why you buy an index and you diversify, because any of these companies, like Nvidia, wasn't in the top 10 years ago. Apple probably was,
Right.
but yeah, I don't know. I mean,
But but then again, the strongest stock on the board is still Palantir.
as far as the year to date
Return.
out of the big companies, yeah,
Yeah. Well, it's not
yeah.
even that big a company, but I mean,
It's
you just don't know where returns are going to come from, and
no,
in this AI ecosystem, this AI world we find ourselves in, a company, it's obviously we're just getting started, despite how many the rate of change of all this is so crazy, but we are still in the very beginning of it all, and so there will be winners, there will be losers, and some of the big winners I maintain are companies today that we may have never heard of yet. They may have yet to emerge. Um, and You just don't know. Palantir is a darling today. Who knows what can happen next year? It could go off the rails for any number of reasons.
well,
They're
I
like,
mean,
wow,
look, we've talked about this before. I mean, if you would have guessed, oh, everyone will have a cell phone. Which cell phone company, maker should I buy? I should own as much Nokia stock as I possibly could. And
right?
no, nobody
No.
saw the iPhone coming. So,
Mm-mm. Yeah, so you have
um,
no idea where the big innovation is going to come from.
yeah.
But I can tell you right now, it's not going to come from Apple. They're Tim Cook, I have to give him credit, has done a great job managing that company after Steve Jobs left and they thought that the world was coming to an end. Um, and he's turned it into a consumer electronics powerhouse, basically, with tremendous revenue streams, and they're enormously profitable, et cetera, et cetera. But there's been a lack of innovation.
Or it's just their stuff just works. Like that, I don't know. I mean, I'm trying to give the other side of it. I don't know what the stock's going to do, but maybe people are. I mean, who knows? Who knows? A
I,
lot of people
I,
look at the car too. Like, I don't know that they should have done an Apple car. Why would they do that?
yeah, that was a waste of $10 billion.
Like, to me, you have somebody else have the capex expense of building the car, and then they just have like the Apple Play ecosystem gets in there.
Yeah, you let
It's
Tesla build one, then you sit down with Elon
yeah.
and okay, we want to brand one of your cars as an Apple car and do some extra stuff with it. And that's how you do that.
All right, I want to talk about semiconductors though, because you and I,
Oh,
it's a place we've been paying attention to. So to set the stage here,
mm-hmm.
semiconductors all time high was what, July of, was it 23 or was it
Yes.
24? 23.
No,
Okay.
it's 23 because 24 was no bueno.
Yeah. So if you look at the SOX index or SMH, which is an
Yeah.
ETF that's, but let's just use the SOX index because it's yeah, all time high in July of 23. And what's fascinating about that, the Mag 7 made its all time high in December of 24. The S&P, well, it was February. Now it's today. And, you look at Microsoft has made an all time high. Nvidia is, Nvidia, I think it made an all time high. But yeah, they haven't made an all time high, but they're finally back there after going sideways. But it's fascinating because we've said our chips, the picks and shovels, and maybe there's other things, but like all these companies who were spending the money on chips were making all time highs and they weren't. They're finally up there. To also
Right.
give you some numbers, we mentioned the S&P, the forward 12 months estimated growth rate by analysts on earnings is 6.32%. On the SOX index, it's priced in, analyst expectations they can change plus 22.13% earnings growth. They're at a
Yeah.
27 forward multiple. So I don't know. They've been trading side. They were doing nothing for a
Yeah.
while, and all of a sudden they
There,
woke
there,
up.
yeah, there's well, you and I, have been looking at this, and I think both of us have been pretty big in semiconductors now for a few years, going into all this. And last year, of course, it was just um, sideways grind, and then this year there was the Liberation Day tariff hammer that really spooked semis, and uh, but now they're now they're coming back, and they've underperformed dramatically all this time, as you point out, while their constituent and all the people that buy everything from them are doing well and making all-time highs, and so they have been lagging. And I thought there was a huge opportunity in semis really all year, from the beginning of the year, and particularly when they got beaten down dramatically um, by tariffs. Uh, and I think we'll see new highs in semis and new highs after that and new highs after that. The demand for semiconductors is not going away.
It is interesting because in the early 2000s, like the internet boom happened, and there were companies that came public with no earnings, no revenue, no nothing, and that was like the picks and shovels. Maybe Cisco. Cisco, I
Yeah,
guess, was sort of the picks and shovels, but
yeah.
it wasn't cheap on a valuation basis. Nvidia has gotten cheaper, even though it's been going up, because the earnings, uh, both
Are
the forward
exploding.
earnings estimates, yeah, and the earnings sort of caught up. So,
Yeah.
um, and I would just say to investors, you already have, if you're invested in a broad index, you already have this stuff in there. Like Nvidia is the
Mhm.
biggest weighted company in the S&P, so you got it. Like you already have this stuff.
Right.
But it's yeah, I mean it did take a while, but the growth there and the net margins on semiconductors. You look at Taiwan Semi, like what are they at 40% margins, something like that?
Oh, yeah. Which are honestly, I mean, that's to me, that's not that big a deal.
Is that they have
Uh,
40% margins? Like, I mean, normally that would kind of be what does Costco have? 3% margin, 4%?
well,
I'd have to look it up. I mean,
it's apples and microchips, but
yeah,
you know, but yeah, the margins in semiconductors are large. Look at Nvidia's margins; they're like
right.
60 and 70%.
Did they come down though? Was it last quarter? Didn't Jensen Wang say, yeah, we had a fall off, but we think with these
It's
new
still in the
products,
40 to 50% range.
yeah, yeah,
People would kill for margins like that. I mean, they're incredible. So in general, you're saying the stock has the semis have 40%, generally a 40% margin.
So I'm looking at a chart of, let me see, the semis. What was the all time high in, let's see, SMH was 281.27, July 10th of 24. So we're
Yeah.
coming up on basically a year that they've been down. I'd have to look at the SOX index. SOX is so the SMH. That's an ETF, and I'm not telling you to buy it. I'm just saying that's a popular ETF for people who
It's
want
an
to do
easier
that.
way to look at it.
Yeah, and they do. It's the larger companies are weighted higher. So, um, but same thing. The SOX index, July 10th, 24. The SOX is a little
We
bit
were
lower
within 50 cents today of the all-time high.
in the SMH. Yeah,
Yeah.
in the ETF. Yeah, I mean I don't know. I mean, we'll see. I mean, the risk for these companies is maybe the promise of AI falls short, and maybe there are legitimate research, like high level stuff, but people like my son are like, well,
Well,
maybe I'll just Google it.
that will absolutely derail it, obviously.
Yeah.
But if that doesn't happen, and I can't envision that actually happening, the level of spend that is going to continue for data centers, um, to stand up, hundreds of racks of thousands of racks of servers and across hundreds of data centers just in the U.S. It takes an enormous amount of semiconductors to do that.
Why? I was going to say, I mean, a lot of times when there are high margins, the business, the MBA textbook would say, you have blue ocean, you have people making a ton of margin, and then new players, new entrants come in. But I feel like the capex spend for somebody coming in new to this space, it's quite involved. to
Hmm.
just, if you and I wanted to start our own semiconductor business, and I certainly have no business doing that. It's like starting an airline. I mean, there's a lot of capex you have to spend.
Oh, it's in the equipment costs are enormous, and for a company like say Nvidia, they have so many vendors that are kind of fractured all over the world. But one of their primary vendors that makes some of the things for their very, very specialized systems is a company called ASML in the Netherlands, and they're the only ones that have this particular machine that can make these sorts of things that NVIDIA needs. I'm sure other people are trying to duplicate that, probably in China or other places, but so far they haven't been able to do that. But yeah, the supply chain for these things is pretty global, and you know bringing a lot of that stuff to the U.S. can be done in some cases, but really it becomes kind of infeasible to do some of those things. Now, having said that, in totality, but having said that, Taiwan Semiconductor, as you well know, being maybe the grandfather of all semis, uh, are building massive facilities, I believe, in your own state.
Yeah, massive, massive in Arizona. I feel like ASML might be putting something big here too, or maybe it's just a
They
larger.
might, they might
I
be
think I
because
I think I saw
tho-
something. Yeah.
those machines that they have are the ones that build out a lot of NVIDIA's high-end chips.
So you'll find this interesting. I pulled up on Bloomberg. It's kind of a map that you can create, and it has NVIDIA and it has 834 customers. I'm going to name all 834 right now. No, I'm not going to do that, but Microsoft, and I don't know when this is as of June 27th. I imagine though this was as of the last earnings reports. So 18.87% of the revenue comes from Microsoft, 9.33 from Meta,
Yeah.
and then Amazon 7.5, Alphabet or Google,
People
and
may
then
not know Microsoft owns 49% of ChatGPT.
I wonder if that's reflected in that revenue, whether it's I'm not sure. And then I look at the suppliers, and it looks like 30. Taiwan Semi. There's an SK Hynix, Wintram,
Mhm.
Fabrinet, Micron is in there. So yeah, I mean, it's kind of a fascinating thing, and you can actually go down and look. Um, but they have competitors like Advanced Micro Devices.
Oh, sure.
Yeah, I don't know. I mean, so anyway, it's. I guess the danger to semis though is if there's some slowdown and these companies have to stop spending all the capex, or that maybe AI
Right.
doesn't.
If somehow this doesn't pan out, right? Like this,
Yeah,
the move right now, AI right now, for most user experiences, is just kind of really cool software that allows you to manipulate a whole bunch of data very easily where you couldn't do it before.
yeah.
And, it provides some force multipliers in certain areas, but where it will become much more universal is this agentic move that is going on. When you have these AI agents, my AI agent talking to your AI agent talking to someone else's AI agent, and doing all these automated tasks much more rapidly and efficiently than they could have been done previously. That is going to be when people start to see, okay, this is what this thing can really do, and how it can really be a force multiplier on a business level where we get more efficiency at less cost. And that hasn't happened yet
No.
because right now the spend has been ludicrous. It's
Well,
been ludicrous.
or somebody, maybe it's Nvidia, maybe it's somebody else. They just figure out lower cost chips that can do the same stuff, and those are good enough. Like that's happened in business too. I guess what
Yeah,
I'm saying is like, even though you or I are like, why are the semis trending sideways when everybody else is making all time highs? And we
yeah.
figured, at some point they catch up. Here's the thing though. You could have, I mean, it all comes down to momentum and really about flows. And it's who's buying what. And I always joke around, more buyers than sellers, things go up. More sellers than buyers, things go down. Like
Right.
it's just the way things go. All right, let me switch to. So I guess what we're saying is like, don't go out and buy stuff or sell stuff just because we're talking about it, right? Figure.
No, don't do
I mean,
that.
honestly, if you're in an index, you already have this stuff, so
You own all of it.
you own all of it. It's great. The index just rebalances itself. It buys more of the stuff that's going. Actually, it is kind of. I always tell people this: the S&P 500. There's a committee that decides what goes in, what goes out, but also if you're buying the S&P, it essentially is a momentum strategy because you're getting more of the stuff that's growing, and you're getting less of the stuff that's going down. So,
Right. And there are any number of things, you know, like Derek mentioned, there's lots of stuff out there. There are lots of ETFs, lots of index ETFs, lots of specialized sub-index ETFs. You can go on and on out there, depending on what kind of exposure you want.
all right, let's talk about oil for a second, and then I want to talk about the lack of inflation. But oil, I look, when the dust up happened, the geopolitical stuff happens, oil rallies, but it really just rallied back into a sidewise mishmash of price. I
Well,
mean,
yeah, I mean, if you look, okay, there was a big move in oil. All right. But you know what? It rallied up to 83. Okay. I can look at a chart right here and go back to September of 2023, and I can see one, two, three, four, five touches of 83. The fifth one being the most recent, all of which, by the way, failed.
isn't
And
inflation adjusted oil price like lower than it was in the 70s?
yes,
It's
no
amazing.
one talks about that, by the way.
I know, right?
No one ever mentions that oil is actually cheaper than it was in the 70s on an inflation adjusted basis.
I think it is. I'm gonna have to do the numbers.
I'm almost positive I'm almost positive that's correct.
Well, I mean, if I look at the generic crude oil future and I go back, let me see. Let me pull up a chart of this. We'll do this kind of live here. And I go back. I don't know how far I can get back on this. Let's see. If I go max,
Crude futures, probably the mid 80s.
yeah, I'd have to kind of. It's not letting me do like a max thing. I got to figure out which contract to look at, but you don't have a price from like the late 70s, early 80s, do you? On
I might.
either
Hang on.
either crude oil. Let's
Let me
see.
see. Uh,
Yeah, I didn't know I was going to talk about oil. I would have pulled the chart. All right,
oh,
certainly
I
not
know.
inflation adjusted, but
I could load it, but my current loaded data feed only goes back to like 1990.
all right. Well, we'll come back to that. Actually, here I'm going to here. I'll Google it. I'm not going to chat GPT it.
Oh,
Uh,
okay.
chart
I
historical.
can ask Perplexity.
I, all right, I'm going to now, and people are like, why can't you possibly do that? The reason is because there's different futures contracts, and I'm just for whatever reason I'm spacing on which. So I want like the continuous commodity one.
Continuous contract. Wasn't that
Yeah,
WTI?
yeah. I was looking for WTI, but anyway, I mean, after what was Katrina? What did oil go to? Was it 145?
Yes.
Yeah, I mean, so think about it. 145, and what is it today? Is it?
83. Oh, what was? It's not, it was right
It's
now.
probably. I think it's below
It's
70 now.
73. Yeah, 73.
Yeah,
73.49.
yeah. So it's half of what it was after Katrina on an inflation adjusted basis. I'll bet you it's cheaper today. I mean, it's cheaper today. But all right.
Okay,
Anyway, back to our point
all right,
though.
Perplexity
Okay.
has told me that the historical average since 1946 adjusted for inflation is $57. Um,
Okay.
and that uh, the historical average since 2000 adjusted for inflation is $78.37.
Yeah. So we're We're a little bit above average, a tiny bit,
Yeah.
not too much.
Now the reason this matters, of course, is if you want to frack oil in the United States or anywhere else, but particularly in the U.S., um, oil has to be at a certain price point to make that doable.
Yeah. Yeah. All right. Well, look, my point of bringing this up though is that was everyone said that's the obvious thing when the geopolitical tensions start, especially in the Middle East. Like, oh yeah, oil might go to 150. I saw some of those headlines. It rallied back into the range and it settled back down. Does that mean that people were wrong? But I think sometimes the obvious thing isn't the correct thing to do. It just seemed too obvious, right?
Well, right. I mean, look, oil has, if you just look at a 3 year daily chart, oil has formed, it's either formed a massive base, a massive sideways distribution base that's bound between 83 and 60.
Mm-hmm. Yeah.
And uh, it has traded, and those numbers, by the way, you don't want crude below like for long below like $65 for fracking to make sense.
Right. Because
Um,
people are like, I'm out of here. I can't make money doing it.
yeah.
And yeah.
So yeah, it was a huge move, but look, it went from near its lows, right? It was at 61 before it took this move up, and it moved right back up into the top of the range, and then ran a gas. No pun intended.
Oh, that's a good pun right there. All right, let's talk inflation or the lack thereof. The
Mhm.
other really common opinion with tariffs, and even right now, we're still seeing inflation's going to rise. And I've talked about this in the show, so listeners know it is mind-boggling, and how the sentiment surveys now have become so political.
Yeah.
Um, and this flipped when Biden was in office. Republicans survey answers were like, "Oh, the economy's horrible. Inflation's going to 87." Now it's flipped, but we just haven't seen any inflation, and I don't think we will see it. I mean, it fails to do the demand side, and I mean everybody
Well,
sort of pre-ordered too. I mean, they have stuff.
right. And the Fed is always late, right? I mean, they're always late. They're late to cut. They're late to raise. That's just how they operate. But in particular, this last stretch has been has been pretty bad. When you look at the numbers, um, it's hard to make a case if you're the Fed why you're not starting to lower rates at this point. What are you waiting for? And they keep saying, well, they intimate that it's the tariff uncertainty really that is preventing them from acting, and that's um, I
I'm just going to
guess
tell you though. I mean, I don't think that if lowering or raising rates will do anything to rise inflation or even to have inflation fall. I think it's irrelevant. It was irrelevant in 2020 because it was a supply driven problem,
yeah,
and they could have kept rates
it's
exactly where they were. That would have worked itself out.
yeah, it's completely irrelevant.
Yeah.
I mean, CPI less shelter, okay. Um, CPI X shelter is 1.5. It's 2.4 with it factored in, but 1.5 without. Okay, and CPI inflation has been moving down steadily, right? Since I mean, it doesn't go down directly. We all know that, but the trend has been down from 22 to today.
Mm-hmm.
And one just wonders what exactly are you waiting for when you have the situation and you don't, I think the Fed in some ways wanted to see like an uptick in unemployment, all kinds of other things happen, and it's not happening. Um, there's not going to be. I don't think there has been a recession, and it looks like there's not going to be one
I mean, I will guarantee you at some point we will have a recession. Will not guarantee when it starts.
eventually. Right.
Yeah.
Well,
I mean,
what's that? What's that saying? The Fed has predicted 8 of the last 3 recessions, or whatever.
I just think it's irrelevant. Like I'm tired of people talking about it, and I don't think lowering interest rates is really going to matter because is the 10-year. Remember the mortgage rates are based upon the 10-year loosely, and
And tech stocks theoretically do better when the 10-year is lower because they
they're
borrow
doing
lots of
fine
money.
now.
Yeah, but they're
They're
fine.
they're doing fine now. They did fine in the 90s. Remember, 90s we had five
Yeah,
percent interest rates. I mean,
right. Oh, you and I talked about this many times. I'm like, well, you could keep rates at probably 4% and it would be fine.
I mean, to me, if you want to lower rates, you lower them a little bit below the 2 year. You get it to 3.75,
Yeah,
and you call it a
because
day.
there still needs to be a risk-free rate of return.
Of course, yeah. I
Yeah,
didn't like having zero interest rates. I thought it
no,
was,
no. That
um,
was the people will look back on it because there is a whole class of people that aren't as old as you and I that are in this industry that some of them just don't know what to make of rates being where they are. But that stretch of time, that 18-year period of time, was the anomaly. That was the anomaly. Um, having rates at 3%, 3.5%, maybe 4%, that's normal because otherwise you have no risk-free rate of return. You have to have a risk-free rate of return.
yeah. I mean
Have a
that
healthy market.
that was odd. I mean, remember, like high yield bonds were getting us 5%, four point
Yeah,
eight percent. I mean, now high yield is around 7.5 or something like that.
which is
Healthier.
because the risk,
Yeah,
the risk you're taking in high yield is greater, and you're being paid for that risk.
it's the other thing too, and I've cautioned younger people in our business when they're using historicals and you're bringing in bonds. I did a show last week about talking about the 60/40, like the 40% that goes into bonds. It's drawing on since 1982 the greatest bull market in bonds ever,
Yeah,
and it's assuming. I mean, you pretty much are going to get whatever the coupon is, whatever the yield to maturity is when you buy a bond. The CFA Institute's done these studies, and they say generally you probably if you hold it from point to point, you'll probably get about the yield to maturity. I mean, that's basically what you get unless it defaults. So yeah, I don't know. I mean, I'm just lower them, don't lower them. I don't think it makes any difference. And
no,
if
I,
you know,
I don't. I think the market's moved on from the Fed. Like they've moved on from tariffs. It's moved on from the Fed. Will there be a bit of a bit of a balance? Will there be another leg up? I think there'll be maybe another leg up when rates start coming down. It might help sustain things. Let the wall of worry continue to be climbed, and we find another leg up. If there's a tariff solution and rates start to come down, then what headwinds are there? I mean, where are the arguments against
oh yeah,
continue?
I'll give you
You know,
10 more. There's always 10 things that there's always. I
look,
just want no,
there are always
there
people
always
getting their
things.
hands.
Yeah. Let's just go through the rationale for this. So the Fed is worried that there'll be inflation because of tariffs. So basically
Yeah,
what they're saying is if prices if all of a sudden you have 10% or whatever it is added to the price of something, is there a solution to raise interest rates to do what? To tamp down demand? Wouldn't the rise in prices tamp down demand on its own? You're sort of
yeah. They don't have to
I
do
don't follow
anything.
that logic. No, they
If
don't have to do
demand is
anything.
if demand's going to fall off, it's going to fall off because of price equilibrium
Yep.
and not because of anything the Fed artificially does.
It doesn't make any sense to me why a quarter point rate cut or a 50 basis point rate cut, whatever. I think there are some people who think rates should go back down. Like I had conversation with one person. They said, "Well, if inflation is 2%, rates should be 2%." I'm like, "No, that's not the case.
No,
No, that's not how it works. Like rates aren't
no.
going back to zero.
That
Chances
I
are
will say
they'll go back to 3.
That
at
will
most
never
three and a
happen
half.
again. I think in my lifetime, in our lifetime, we'll never see that again. I hope.
Oh, or negative yield to maturity paper across the world.
Yeah. Oh, people, they'll be writing about that for years.
Yeah,
Um,
that was just messed up. So,
that was bonkers. And then if you keep, eventually you become Japan.
which
Uh,
has did they touch the 87 highs? That took a while.
yeah, but they have finally. It's becoming a problem. The carry trade, always kind of a precarious thing. The yields in Japan are taking off, and the carry trade might, you might see a little bit of an unwind on the whole yen carry trade thing. It's one of the shoes. It's one of the reasons, of course, but it's one of the shoes. It's always dangling out there, waiting to drop. But with Japanese yields are surging, the yen is on the rise. The dollar's been weak, right? So, um, you have to be careful. And if you don't know what carry trades are, you're much better off. Don't even worry about it. But it's one of those,
We've done shows dealing that. We've
yeah.
done shows on that. All right, Spencer. I've stolen from Barry Ritholtz. He's with his guest on Bloomberg, on his Bloomberg radio show and podcast. He at the end of it, he asked the guest like, "What are you reading, writing, or watching?" So I always go through some recommendations. So, and anything, Spencer, that
Oh, let's see. I read geopolitical futures every day, written uh, by a bunch of really good people that have a nice pulse on, I think, geopolitics. George Friedman is the director of that group. He's running a site called Stratfor, but he's still around, and I read that. I read a lot of stuff. You mentioned Chamath Palihapitiya. I read his Substack, which is excellent. I can't recommend it enough. Um, and I just finished a book, believe it or not, on India called India's Long Road. Um, it was really good about how India is on the way up, but it's going to take a long time.
my guess is that's probably 1,000-page book. Am I right?
No, it's about 600 pages.
Okay. All right. Feel like that has the robust title that I feel like it would be. Yeah. All right. No, those are yeah. It's funny too because people have said I've been critical of Chamath Palihapitiya in the past, and my issue when he was doing the SPAC stuff was that
Mhm.
CNBC essentially gave him like an hour long,
It was like an infomercial.
infomercial. Yeah, it
Yeah,
was like
yeah. No, I
seriously.
agree. I agree. Look, I don't begrudge anyone making a living and making money in this business. There are lots of ways to do it, and I don't think it was slimy what he did. So he's caught lots of flack for it. No one ever has to invest in anything, but the format in which they did it, I thought,
I was more like CNBC. Really, you're gonna put somebody on for an hour, basically
I
doing
know,
an
like
infomercial,
like
and
like every week.
he would give he would have a PowerPoint, like I don't know if it was PowerPoint, but a presentation where he'd go through like the company, and I'm like, CNBC do better. I'm be
Yeah.
honest with you, I don't really
Now,
watch
now,
CNBC anymore.
neither do I. But now, having said that, Chamath is, in my opinion, um, the real deal. And he has some really good takes on things. I don't agree with everything, but he's an excellent. He takes in and breaks down information in a way that I think is very unique. And I think if people just followed him on Twitter, um, and just read his Substack, you'd learn a lot.
Well, I agree. I mean, he breaks things down. He gives answers that are very succinct. So, all right. Stanley Cup Finals hockey is over. So I got
Mhm.
back a show called The Bear came back for season 4 on Hulu,
Mm.
and I'm through. I think the first 4 episodes. So The Bear, if anybody, I don't know if you've seen that before, but it is like Emmy worthy TV. Like the acting in it, it's kind of Succession esque
Huh.
with how it's written and how it's active, and
I'll
so
have to
the
watch it. I didn't even know it existed.
Yeah, Four Seasons, The Bear, and you have to pay attention because but yeah, season 4 just dropped, and thankfully Hulu, unlike Apple TV, drops every episode at once, so you can binge the whole
Yeah,
thing
that
this weekend.
irks me about Apple. They make you wait like old television. I don't like that.
No, just drop everything. So, all right,
Okay.
Spencer,
Okay.
I think we covered everything. Thanks for coming on again. I'm sure we'll have you on
Sure.
again. And for everyone else, have a good week. And we'll talk to everybody soon. Take care.
Thank you. Bye bye.